Last week was our first playoff game, and my plaque psoriasis was so itchy under all my gear. Sometimes just thinking about scratching could take me out of the moment. And then my doctor told me I could get clearer skin with a pill called Otezla.
Otezla Apremilast is a prescription medicine used to treat adult patients with plaque psoriasis for whom phototherapy or systemic therapy is appropriate. Otezla can help you get clearer skin after just 4 months.
Okay, ready for the next game. Talking to my doctor about a pill was a total game changer.
Don't use Otezla if you're allergic to it. Get medical help right away if you have trouble breathing or swallowing, swelling of the face, lips, tongue, throat, or arms. Severe diarrhea, nausea or vomiting, depression, suicidal thoughts, or weight loss can happen. Tell your doctor if any of these occur and if you have a history of depression or suicidal thoughts. Live in the moment. Ask your doctor about Otezla. Call 1-844-4-OTEZLA or visit Otezla.com for prescribing info about cost, and more.
Reality radio for a really great future. We're talking real money.
Well, this is reality. This is a big part of your life that we are here to discuss, as we do every Saturday at this time or on our very popular podcast. This is Talking Real Money. I am one of your two hosts. I'm Don McDonald. Over there's Tom Cock, and we have this handy-dandy toll-free phone number for you to call so that we can help you finally get investing right, because I'm telling most of you, you're doing it wrong. We've talked to a lot of people. In fact, we talked to a lot of them just this week who called us saying we're doing it wrong.
And some who were done wrong, by the way, as well.
Yeah, well,
Good
we
Lord.
see those all the time. So here's that number. It's 855-935-TALK, 855-935-8255. Give us a call, and we will talk with you about your money and how you can end up with more of it by taking a lot of the idiocy out of the process. There are a lot of people out there who pretend to do things that really, in the long run, can't be done. Like beat the market.
Well, there's a guy who runs a bond fund who was at one time called the Bond King.
Bond King.
Yeah, and I
am the Bond King.
I think you can safely now say
James Bond
the
King.
king has no clothes. I mean, you can safely say that about a guy named Bill Gross, because at one time he ran a thing called the PIMCO Total Return Fund. He was, I think, the partner at PIMCO.
Yeah,
that blew up.
$300 billion under management.
A lot of money, especially in a bond fund. But it's not your grandmother's bond fund, because, I mean, this is a bond fund that buys derivatives. They buy all kinds of weird stuff. They leverage up. They do all kinds of weird things.
Well, right now, they had a bad week this past
but
week.
I'm getting to that, because that was the PIMCO Total Return Fund. Now,
you're talking about the old one.
The
PIMCO
old
Total
days,
Return Fund. Yeah, and then he got in a hissy fit with Al Arian, his partner over there. And he left. Bill Gross left and went to a little company in Denver that used to be a nice no-load mutual fund company called Janus. Now they're Janus Henderson, and they're fully loaded mutual funds. And
everything they do has a load on it now, Janus?
Oh, yeah.
I didn't know that. Okay.
Oh, yeah.
Wow.
Oh,
I mean, they built that reputation when they had the funds that went straight up in the late 90s until they went straight down.
Didn't.
Well, because
and
they all owned about the same 50 stocks, in my recollection.
Well, and they also proved the theory that it's pretty much impossible, and I don't even think it's a theory anymore. I think let's call it fact, that beating the market is close to impossible consistently over a long period of time.
Yeah, even for us. Last week we had a call from a guy who said, well, yeah, for you little people, index funds are fine. For the smart people in the back room, we're making real money when just trading ourselves right to the
special people like multi-billionaire tantrum boy Bill Gross.
Yeah, so Bill Gross now runs the Unconstrained Bond Fund, I think it is.
The Janus Global Unconstrained Bond Fund. The word unconstrained means he can pretty much do anything he wants.
And frankly, if I'm handing my money to somebody, I don't want that word used. I don't care who they are. That just scares me. I hate that. That just makes me nervous.
Yeah, well, you're no Bill Gross.
No, I guess not, because he's in a bond fund that lost 3% in one day. A bond fund that lost 3% in one day and has now lost, I think, close to 6% for the year.
What's even more interesting is how he went about losing it. He made a bet that interest rates in Europe were going to rise, and he bet that German rates in particular would rise. not thinking that Italy could blow up in his face and cause all this money to pour into German bonds as people look for safety. And then he blames the news media for blowing it out of proportion.
It's ridiculous the amount of coverage he's gotten. That's what he said. Ridiculous.
Because he made this coverage for himself when he proclaimed himself to be the Lord of the Bonds.
Okay, that's better than the Bond King, I guess so.
I am Lord of the Bonds.
Lord has a much nicer ring to it, sure. So anyway, so he, I think the takeaway is, number one, and I think Scott Burns did a piece on this a number of years ago in the Wall Street Journal, that really at the end of the day, the best performing bond funds are the ones that charge you the least, because bonds don't make a whole lot. And what does this bond fund charge? You looked it up.
I love
it's
this
still
part.
shocking.
I love this part. If you're a retail customer and you don't want to pay the front end load to Janus, they'll put you in the Class C shares. The Class C shares have an annual expense ratio of 1.77%. Folks, that's about the yield of bonds.
Yeah, I was going to say, to the uninitiated, that's about what the bonds are paying.
But I really delved deeply into his portfolio, and it's a wackadoodle portfolio. He's got a third of the portfolio in cash, making no money whatsoever. He's got a substantial portion of the portfolio in 5 individual stocks, including Aetna and Time Warner. Stocks, not bonds. It's a bond fund.
Yep.
And a pretty decent chunk, $10 million, is invested in another mutual fund by Nuveen, which is a
what?
So
it's a fund of funds now?
It's a fund of another fund. So he's paying 1% per year to Nuveen to get this in a taxable bond fund, own muni bonds.
No, that makes sense.
Municipal tax-free bonds. Apparently, he's lost it. He should probably just go ahead.
King
and
has
retire.
no clothes. Sorry.
Yeah, Bill, hand over your ring.
Hand
over the ring, Lord. I mean, the bonds.
Tom and Don are talking real money.
If you're sick of investing through an insurance agent or a stockbroker and you're in the market for a fee-only advisor who charges truly low fees and uses a scientific approach to building portfolios for your risk tolerance and need, you should check out Vestory. Tom and I started this firm, and it is devoted to educating everyone, total transparency, clarity, low fees, and great service. If you're looking for an advisor, you ought to at least take a look at us at Vestory.com. That's Vestory.com. Or give us a call, 800-386-3004.
Your guides to a really great financial future. Tom and Don are talking real money.
855-935-TALK, our number, 855-935-8255. I'm Don, that's Tom. And, you may be asking yourself, so if people can't beat the market, why do all of these guys like Bill Gross and many others make these outrageous claims that they have these magical powers to do all kinds of magical things? Well, the answer, you'd think it would be complex, but it's really, really simple. In Bill Gross's case, the answer is $2.5 billion.
Yeah, he's got a lot of money, a lot of which is in this fund, by the way.
Yeah, that's even funnier. The Unconstrained Global Bond Fund at Janus Henderson has $2.1 billion in the fund. Of that, 1/3 is Bill Gross's own money.
Knew he brought a lot over there.
1/3.
So when he has a bad day, then he's really having a bad day for himself.
It's like
painful.
Double bad.
Yeah, exactly.
It's true. And his wife just divorced him. The cat just died.
Oh, I didn't know his wife just divorced him. Really?
Oh, yeah.
He's been married
all in
for
the
a long
past
time.
year or something.
Okay.
I mean,
but his hair still looks great. I gotta say, I saw him. It still looks good. I wish I had. I hope I have hair like that at 74.
He, like Trump, has mastered the art of the comb over.
Okay, so it's not real, but whatever. It looks good.
It's real. Okay. It's just a nice comb over.
Okay.
When you got $2.5 billion, you can have somebody comb it over for you
with their toes.
You have your own comber. He has a comber that goes on the road for him.
So the point you were trying to make was there's a lot of money in making predictions and occasionally being right. Well, occasionally being right. He was right for a long time.
Right.
Yeah.
And then he was wrong.
Exactly.
It was like Peter Lynch was right for a long time, and then he went, I don't think I can keep this up. Discretion,
quit.
better part of valor. Let's quit.
Now you're dating yourself. Nobody remembers
It's
Peter
like
Lynch anymore.
it's like Peyton Manning. He said, "You know what? I won a Super Bowl. I quit."
No, Peyton Manning
Smart
said
move.
Omaha and went home and had a steak. So I heard him.
Yeah, for Warren Buffett, with Warren Buffett.
Yeah, I guess he did.
I got to get the money angle in. 855-935-TALK is our phone number. Give us a call. We'll try to help you manage your money better so that it's in your best interest, not theirs. Kathy, you're next. Welcome to the show.
Hi, Kathy.
Hi, glad to talk to you. So, what can people do who have, a lower 401k? It's like under $500,000, maybe closer to 350, to get a fiduciary financial advisor, at $300 an hour, and they're talking about for retirement planning like 10 to 12 hours. That seems like an incredible amount of money when you don't have that much. So, what do you do?
Okay,
Actually, it's really not, though, when you think about it. It seems like a lot of money, but let me give you an example. If you went to your friendly neighborhood stockbroker who claims they don't charge anything, and you handed them $500,000 to invest, they'd take home a big fat $25,000 commission, just like that. You wouldn't know it.
I would not. Yes. Okay.
So, I mean, that's not very helpful, I don't think. But the point is, I mean, tell us, do you need planning? I mean, you said I need this many hours of planning. I mean, how difficult is your situation? Or do you have any idea how much time that may take?
I'm thinking it wouldn't take that much time. I mean, basically, you've got two 401ks. Looking at retiring, within the year, just trying to get some advice on, like where should this be invested? Where should it be rolled over into? How do we know?
Okay, then let me ask you another question there. Do you want to do that on your own, or do you want to have somebody do it for you?
Well, I mean, I would like some advice on it. I mean, I think they can do it on our own, having read things and all, but it just seems like an incredible thing to do entirely on your own.
It is. It's hard.
If you mess it up, boy, that's it.
It's hard because you've got to do a lot of things. One, you have to sit down and on your very own, without the help of an advisor, you have to sit down on your very own and figure out what kind of risk tolerance you have, what kind of need to take risk you have, how much you're going to need in retirement, how will that grow or change? How will your assets support that? When are you going to start taking Social Security? What kind of investment vehicles make the most sense given all of those things? That's why I'm saying, I didn't mean to sound trite by any means, because you're going to pay somebody somewhere for something unless you totally do it on your own. And I got to tell you, from doing this for like 30 years, I rarely meet anyone who has the ability to take care of all of that, particularly when you're getting to retirement with $500,000 or more on their own.
Here's another idea, by the way. You could go ask around. You could go to dfaus.com, right?
Yeah.
Don's shaking his head.
Yeah.
No, it's fine.
And
I'm just saying she's going to pay for the service.
Well, no,
no
that's
matter
what I'm saying. But she could go to a few people and ask them what they would charge. I think there you'd at least get it would be a fair. In other words, if you took this out and you went to somebody selling annuities, guess what? They're going to sell you an annuity. That's not the direction we want you to go. If you go to dfaus.com, talk to a few advisors, you can at least look at the range of fees. There may be, by the way, somebody who does this, maybe, for 1% a year or less, which I happen to think is very fair and takes care of you.
But there again, Tom, 1% of her portfolio a year is $4,500.
I thought you said $350, but okay. So
I thought you said $5. $350, yeah, okay, so that's less.
So, I mean, that's a decision you would have to make. Are there people that can just set you? I mean, and also I'm hearing just somebody tell me what to do and I'll go do it. The problem often is we find people we give that advice to and then they end up not following it all along, especially when markets go up and they go down. That's the issue.
Yes. Well, I've listened to you enough to know, the money is there, and you don't do emotional moves and all. But, I mean, there comes a point, when you're getting ready to retire and you say, it's not going to get that much higher. And especially this year, hey, it's getting lower.
Well, yeah, we can't. You can't look at a year. I mean, a short period of time because we literally
and that,
don't know.
Again, becomes part of the problem
Yep.
and why it is becomes so hard to do it on your own. We as human beings have this nasty habit. We project what we're currently experiencing at ad infinitum.
Recency bias. Yeah.
Yeah. And so you look at the market today and you think, I'm just never going to grow again, but you have to build a portfolio based on the longer term realities of investing. And again, that leads me back to saying most people need to pay an advisor. As a matter of fact, both Vanguard and Morningstar both did some really involved studies that found that paying a fee only 100% fiduciary advisor added between 1.8 and 3% per year
That's true.
to the average
Yeah.
investor's return, because generally the biggest part of that was the way investors tend to behave despite their better judgment. So I would not dissuade you from paying somebody, but I would shop around and find somebody with whom you like working, because it really should be like your doctor. It should be a long-term
Yeah, I
process.
agree.
You should be with them for life. So thanks for the call, Kathy. We appreciate it. 855-935-TALK is our telephone number. And what we talk about really depends on what's going on in your life, particularly financially, particularly investment-wise. And we want to keep you from being led astray, because we know a lot of people who are doing that every day.
Tom and Don are talking real money.
If you need help allocating your retirement plan at work, you can get free help at 401-411.com. That's 401-411.com.
For your real life and real future, Tom and Don are talking real money.
Give us a call. 855-935-8255. We'll try to help you manage money better, deal with investment problems better, stop being ripped off, a lot of stuff. Give us a call, 855-935-TALK, 855-935-8255. And we were talking about the complexity of planning for retirement. There's a lot of moving parts that you're not necessarily going to think about doing this on your own, which is why 100% fiduciary advisor is so important. And by the way, there are a plethora of bald-faced liars, particularly on the radio, doing shows where they claim to be fiduciaries, and then they even look their potential clients in the eye and say, I'm your fiduciary, and then they're selling them indexed annuities. And you crooks know who you are, you lying
There's
so-and-so.
scoundrels out there. Yes, I think that really rankles me when I hear about that.
And they say, "Oh no, I'm selling you an index annuity as your fiduciary."
Yeah, you wouldn't be able to do that.
Yeah, that's 7% commission that I'm not telling you I'm getting.
So, and by the way, just to go back to Kathy just for a moment, because she raises an interesting point. People often think, "Hey, I only have $350,000, $400,000. I don't need to pay somebody." That could be very expensive, because that money is exactly what has to last for a long time. And by the way, one of the things, you said there's a lot of moving parts. One of those is Social Security. And we spend a lot of time in our classes trying to show you that for the most part, for most people, really makes sense to wait until age 70 to take Social Security.
Well, there's a new study that was done by the National Bureau of Economic Research, written by a Stanford economist, along with some work with folks at Financial Engines and George Mason University, and it was called "The Power of Working Longer," and it really spells out some of the how huge the benefit for working a little longer is. Let me give you an example from the study. Now, in this case, they took a hypothetical 46-year-old in 2013.
Okay.
This person was earning $114,000 a year and was going to put 10% of their salary in an investment portfolio. They don't give me the returns that they had, but the paper showed that working just 2.5 years past 66 would give you the same effect on your monthly retirement income as saving $11,400 and investing it every year for 10 years.
Got a lot of numbers there. The bottom line was waiting a little while longer on Social Security makes up for a lack of saving in some cases.
It makes up for a huge lack of saving.
Yeah. And this is a struggle because still like over 40% of Americans wake up at age 62 and go take their benefit. And here's the part that I urge you to consider if you do that. Number one, if you're 62, the odds are you could live another 20 years.
Odds are you don't know what the odds are.
Exactly. So in 24 years, a normal inflation rate, the price of everything doubles, right? Social Security has not kept up with that. In other words, has not been able to maintain that sort of increase. So you're locking in a benefit today at that rate that you're going to basically get for a very long period of time, minus some cost of living increases. So this is, I hate telling people this, but here's an idea, because this is something
It's kind
I
of
thought
painful
about. It is
to think. For some folks, it's like I can't go into work,
and that's the point. That I don't want to get up at 4:30 on Tuesday and have to drive to rent, whatever it is. Right? I get it, and I sometimes, trust me, feel the same way.
Why do you always pick on rent?
I don't. Okay, I got to drive to Everett and. Is that better? I got to drive to Woodinville. I live in Woodinville, so I can pick on Woodinville.
Oh, absolutely pick on Woodinville. You do live there.
But the point is, a lot of people say, I'm tired. I've been doing this for a long time. I don't want to have to do. Okay, fair enough. Fair enough. I just talked to a guy this week who retired. This is all about retirement. But he works part-time. He still gets an income from that. He's delayed Social Security. He's taking a little bit out of his retirement accounts, plus the money he's making, and that supplies his cost of living. He's going to wait till later to take Social Security. I think that, for many people, makes a lot of sense.
And the differences can be huge. 855-935-TALK is our phone number, 855-935-8255. Give us a call. We'd love to help you.
Tom and Don are talking real money.
If you're looking for a nice short podcast to tide you over between episodes of Talking Real Money, check out Money 30. Money 30 podcasts are between 2 and 4 minutes long, and they're available at every major podcast service, including Apple Podcasts, or you can visit money30.com.
Reality radio for a really great future. We're talking real money.
Hello again. I'm Don. That's Tom. This is Talking Real Money, and we have this number that you are invited to call to get some direction, advice, counsel on dealing with money, particularly investing it, and that number is 855-935-TALK, 855-935-8255.
Those of you concerned about paying charges, that is a toll-free number, too.
Right. We're saving you money from the get-go.
Every number is a toll-free number. Okay.
No, it isn't. Only on your cell. If you call from your home phone.
I don't make a lot of phone calls from my home. I'm sorry.
I don't even have one anymore.
I only have one as a backup, so.
I have a number, but it's not plugged in.
Yeah, I love when people call me on mine. I think, you're not exactly a close friend or anything. So, got it.
I have a number, but we never use it. Can I share an email I got today?
Please do.
I did. I got this email, 11:02 a.m. today, from the folks at AAII. And AAII, I grow more disappointed with you as an organization every single day.
American Association of Individual Investors. This is a group that has chapters all over the country. Don and I have spoken to many of them, Portland, Seattle, et cetera, et cetera.
I am seriously considering never speaking at one again because of the way.
Go ahead.
Because of the way they market.
Yeah, we just spoke at their conference down in Orlando last fall. Yeah.
Yeah, I don't think I'm
okay. What's up? What's up? You look kind of down on your dauber there.
This is supposedly from the desk of John Bukowski, who's the president.
Yes,
I don't think he wrote this. Least I hope he didn't. He writes. He says, "Hi, I'm John, President so and so. I want to share with you a simple but effective formula that nearly doubled the gains of the average investor over the past decade." And then he goes on, each and every day I talk to average investors, and they don't have a plan or a safety net. Each day brings us closer to the end of this bull market. Remember, we just celebrated its 9th birthday, but it cannot last forever. Corrections are the norm. Okay, you think he's talking about a defensive strategy, right?
I think he said something about safety net there, yes.
Yeah. However, AAII members are not concerned. They know markets have their ups and downs, but that's expected because it's their long-term game plan that sets them apart. Starts by choosing to invest in the right kinds of stocks, and then they show a chart comparing the Vanguard Index 500 to the AAII Shadow Stock Portfolio, and go on to say, over the past 25 years, our proprietary, members-only portfolio has performed far better than the overall market, up 3,927% versus 871%. Now, what is a shadow?
That's like 3.5 to 1.
It's a lot.
Yeah, that's big money.
No, actually, it's over 4 to 1.
Did you say 3,900 to 800? Okay, whatever.
Yeah.
4 times 8, 32. Correct. Thank you. So they're touting big returns from a stock picking idea.
Because they
picking portfolio.
Pick their shadow stock portfolio, which they compare to blue chips, and they even allude to a degree of safety. Wasn't there that illusion in some of that?
Well, you said safety net. I mean, really, stock should not be considered a safety net. Ever.
I did some research, and I discovered that the AAII shadow stock portfolio, which I've never received, by the way, and I'm an AAII member for life, never seen it. In fact, the only way they want to sell it to me is if I buy their newsletter.
How much?
I don't know. It's like 200 and something a year or something.
Should have paid it. You would have made
should have, I guess.
Big money.
But what is it? What is a shadow stock portfolio, you ask? Well, I'm going to tell you.
Okay.
Shadow stocks are stocks that aren't followed by the big brokerage firms. Now, let me just tell you, almost every stock on the planet is followed by a brokerage firm somewhere, unless, of course, they are so small as to be practically invisible. In fact, there's a name for them. They're called microcaps. AAII picks stocks, tiny company stocks, and they build this portfolio with them. Now, they play an interesting little game. They pick the stocks in their portfolio, and they actually have a portfolio, so they can show these kind of numbers. And then, then they tell all of their members about it. What do all those members then go out and do?
They buy the stocks, I'm assuming.
Yes, there's a huge burst of activity right after AAII.
So maybe the price goes up as a result of that?
The price, because they're so lightly traded, it doesn't just go up, it soars.
Okay, but it's still not fair to compare microcap stocks to the Standard & Poor's 500. Those are two completely different
and we will talk about that,
That's
too.
Crazy,
but first, we're going to take a break. Give us a call, 855-935-TALK, 855-935-8255. I don't know what's happened to the AAII, but it's becoming shill central.
Tom and Don are talking real money.
Keeping the podcast breaks as painless as possible is my goal. That's why I want to very quickly tell you about the only magazine I've ever heard of that is 100% real investing all the time. There's no business news, no speculative advice, and certainly no lifestyle stuff. It's called Real Investing Journal. I publish it every quarter, and you can get 2 full years for only $25 at realinvestingjournal.com. That's realinvestingjournal.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Hi, I'm Don. That's Tom. The number's 855-935-TALK. 855-935-8255. Tom, what do you think the purpose of the original purpose of the American Association of Individual Investors was?
Well, the reason we liked them, the charter was education, helping people understand really how to invest in markets.
Right. Yeah. And they're a non-profit organization.
True. Yeah, I know. So why are they writing newsletters that sound like for-profit hawkers?
Apparently because somebody's making a lot of money. Now, let me just give you a couple of interesting examples.
Okay.
By the way, this is from a column by Jason Zwei.
Oh, okay.
That I found from 2015. In June of 2015, June 4th, they recommended 2 companies, CDI Corp, little company, that between June 4th and June 16th went up 13%.
Between June 4th? Wow, that's fast.
13% in 2 weeks.
And then what?
The company said there's no other reason. There's nothing going on. It was just that AAII recommended it. So suddenly the value of their portfolio goes up a lot. Then they also, at the same time, recommended Salem Media Group.
We know them,
the radio
sure.
owners.
Yeah, of course. Mm-hmm. Yeah.
Their stock over that same 12-day period went up almost 24%.
And nothing was happening.
Right.
Other than
in that period of time, AAII put $34,000 into those two stocks. The two companies gained $55 million in market value.
Wow.
That is how they can post these big gains, because they're making the gains. Now, let me just read a little direct quote from Jason. Quote, unless you traded exactly when AAII does, you couldn't have matched the astonishing performance of the shadow stock portfolio. And then here's a quote from James Clunan, who was the president and the founder of AAII. He goes, quote, because we trade before we tell everyone what we did, the people trying to emulate us create an upward bias. In other words, they make us look more successful than the system really is. And the people who are buying in, like, let's say the guys who bought in 12 days after the recommendation.
Guess what?
They probably ended up losing money on those positions. And I got to tell you, I find it personally, as someone who's been an educator for 30 years on money, I find it, and a member, I am going to send a letter to Clunan quitting my membership. And I think AAII owes the country an apology for this kind of egregious marketing.
For hawking stocks, for trying to pick companies, and in a way, by the way,
manipulating the market.
Front running in a way. I mean, they're not registered advisors, but in a way, this is what we call front running. I mean, you're buying it, and then you're telling everybody, "I get into this company, you got to own it." Yeah, I think for me, they're veering away from what we talked about at the beginning. They're supposed to be educating people on how to invest. And by the way, this has been one of the problems I've had for a long time. Is AAII meetings are the idea du jour.
Yeah.
They have this week the guy who tells you, how to trade German bonds, and then next week it's the guy who tells you how to short Italy. I mean, it's always this group of ideas, and we know, having looked at many of your portfolios are made up of ideas, and they should not be. That is not investing. No. That is really speculating. So
gambling. Let's call it.
Are you going to tear up the card right there? Can I watch you
gambling?
Do that?
I don't even have a card.
You're not a card-carrying member anymore?
But I am seriously going to write a letter to Jim Clunan, because he gave me this membership years ago in Phoenix. He took me out to dinner, and he said, I want to tell you about AAII and the whole rigmarole. And he gave me a membership, and I've had it, now for 25 years.
Are you going to tweet it out right now? Tell people you're out?
I don't know. Maybe I should.
I think you should.
The funny thing is they've invited me to speak at the Orlando meeting. Now I'm trying to decide. You know what I think I do? I was going to turn it down, but I think I'll go and make it my swan song.
You can light your card on fire there at the meeting or something.
No, I honestly think I'll make it my swan song, and I think this will be the topic.
Why you should quit your AAII membership by Don McDonald.
Because they're not educating anymore.
You're making a lot of friends. I think
educating.
Jordan Goodman's looking for you. You're going to have AAII on the hunt.
Yeah.
Not to mention all the people selling those great annuities. You got a fan list.
Thank goodness I'm old enough that I just don't care anymore.
Well, and you can't run that fast anymore, so it doesn't really matter.
I've had a good life. If they want to take me down.
It's over.
Oh, my gosh. Speaking of Jordan Goodman, here's an idea.
Now, those of you, Jordan Good, we interviewed Jordan last Saturday on our show KVI. That follows this one. Yeah.
It's Como's sister station,
it was a tad,
it's not like we're cheating.
A little uncomfortable because we were asking him about investments.
It was not uncomfortable.
I think it was for him.
Oh, for him, not for me.
I wasn't talking about you. It's not all about you all the time, okay?
And I don't think it was for the listeners. I think they went, oh, my
No, one guy wrote us. Another guy called me last week, said they liked it. Yeah.
Yeah.
But anyway, so he's holds himself out as a financial journalist, but he's been selling a lot of things. Was that fair?
That's fair.
Okay. So and he sold something, by the way, that the SEC turned into
to be a
Ponzi. And he made a commitment to you last week that I don't think he's ever made publicly. He said, if it turns out to be a Ponzi scheme, I will give them the money that I earned back. That's pretty dramatic.
Yeah, I know. I was shocked.
As a matter
of fact, I sent a note to the reporter from the Wall Street Journal
who
wrote a story about him, telling her about it, and she went, he said, what?
I want the tape. Give me the tape.
I sent her the tape.
Whatever it is.
If you want to go listen.
Yeah.
It's up at, you go to Apple Podcasts or Stitcher or iHeartRadio. Go to the Talking Real Money podcast for last Saturday, the 3rd hour, and you can listen. Now, here's what I was thinking. I'm thinking that maybe if I have time this week, I'll sit down and edit it to fit the format on Como. I
got an idea too, by the way. What? Why don't we get somebody from AAII on our longer form show on KVI to talk about this?
Ooh.
I mean, I think we brought it up when we were down there with them in Orlando, didn't we? And they were like, yeah, everybody wants the hot stock and blah, blah. And we're
here's my guess.
Lord.
Now, I found an article by Mark Hulbert, who, by the way, we saw at AAII in Orlando. And he tried to contact them about their outrageous claims, and they refused to
come on. They can't. Really?
They didn't. Yes, he says right here in his article.
That's crazy. That literally is crazy. Because if you're going to put the stuff out there, you're going to write a newsletter, you better be prepared to defend it.
Well, particularly with Mark Hulbert, who checks on performance of newsletters.
Pretty well known.
And
he doesn't do that anymore, but okay. But still.
He said the returns he can track, they underperform the market.
Yeah, well, and this is the other part. If you're in microcap stocks, you are taking way more risk than being in the Standard & Poor's 500. The S&P 500 are 500 solid, big, huge companies. Microcaps are small firms that may or may not continue. Let's put it that way. So
I take it back. It wasn't Hulbert. It was Eric Tyson who wrote Investing for Dummies.
Yeah, right.
He had interviewed Hulbert, and then he tried to call AAII to get their comment, but they wouldn't respond.
Okay, that's silly. You're going to write the stuff, you better be prepared to defend it. That's poor practice, I'll put it that way.
Oh, you think?
You know, can, by the way, we'll tell you more about this later, but you can come to one of our classes. We'll show you what investing really is, how it really works, and it has nothing to do with picking stocks, timing markets, or any of that silliness. So,
not a thing. 855-935-TALK's our number.
Tom and Don are talking real money.
We mention 855-935-TALK, 855-935-8255 throughout the podcast. But you need to know that you can call that number 24 hours a day, 7 days a week. Leave your question, and those will be answered in special Talking Real Money podcasts that will appear on this particular site in the future. So give us a call, 855-935-TALK, 855-935-8255.
For your real life and real future, Tom and Don are talking real money.
And speaking of classes, you know, school is either out or about to get out for most kids, but for adults, our education never, ever ends. That's why we're educating you on managing money better with those same classes Tom talked about twice in June. So check out these events at TalkingRealMoney.com and get your tickets while they last. That's TalkingRealMoney.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That should keep the lawyers happy.